This conference will now be recorded.
Thank you.
Welcome.
So I had the production budget, and I understood everything. And then when I got to part 4, you told me to use the quantity from the beginning of quarter 2. So I did the
Year 2, quarter 1.
year 2, quarter 1.
Okay.
I did this, and the first quarter, you told me to do the break-even quarter, right?
Correct.
So I did the break-even quarter, and I used that quantity down below there. And then I took 10% of that
Okay.
and put it here.
Okay.
Is that right?
Put 10% and put that with a 1333. Then you took 50% of it.
I mean, yes, I'm sorry. Yes, I took 10% of that and I took 50% of this.
Okay.
So is that right?
Yeah, let's see. Okay. Let's look at year 2. Well, year 1. You have beginning inventory there. Then in year 2, you brought down the beginning inventory from year 1 for beginning inventory. Your ending for year 1 became beginning for year 2.
Right.
So when you got to year 3, you'd have counted to the beginning from the desired ending from year 2.
So right here, I'm supposed to get this number from here, right?
No. Where did your 1,000 come from? What line was that on?
The 1,000, I got it from the sales of. Oh, I see. I should have got it from the ending inventory, not the sales.
Correct.
Okay, so this needs to be 1,500, and this needs to be 2,000.
Yeah, I guess it's a good thing you came on. What you doing, KP?
I don't know what I'm doing. I'm just looking like, I just don't know. I feel like every week I accomplish something only to be back where I started the next week on something new.
Well, that's what life is. It doesn't stay the same. Brady.
What's that?
Working on the production budget. Don't y'all have the labor budget?
Yeah, we have labor, direct labor.
So your top line on labor is going to come from the bottom line on production.
So I have the labor.
So I take this whole line and copy it.
Correct. And it goes on the raw materials ink, raw materials paper, and direct labor.
Oh, I don't know. I shouldn't have put any formulas in it. I don't know if that messes it up or not. Yeah, it messes up. Well, hold on. I gotta fix that then because I have formulas in there.
Okay, let's go ahead. But the key thing is, Brady, you see the numbers on the bottom of the production budget, correct?
Mm-hmm. Yeah. You talking about the 2,000, 2,500, 3,000? That you talking about that?
Correct.
Units produced?
That becomes the top line on your budget. Units to be produced.
So I'll put that at the top, and then the unit requirements.
You know what a per unit requirement is, don't you, Brady?
Sir,
You do know what a per unit requirement is.
I remember. I think.
So what's the per unit requirement in this problem? From the assumption.
You said what's the per unit requirement in this problem?
Hmm?
Wouldn't it be the total number of units produced?
No.
Oh, well, I don't know then. Thought I did. So
Look at,
what the unit requirements? Where would that come from? My units produced line?
well, it'll come from your assumptions line on the labor.
Hold on. I took a picture of it. You talking about assumption where we had the that's not it, the sale budget and stuff? No.
No. All the way back to the basic assumptions that she,
Oh, at the top.
yeah.
I didn't take a picture of it. Okay. So it'll be 2.
I don't know, I was pulling mine up. Didn't I put the problem in there? In the blackboard for you all?
I took pictures of what I needed. Would it be on the course content? Let me see.
Mm-hmm.
Master budget. The worksheet is in there.
There'd be 2 documents in there, the worksheet.
It's in there. Hold on, I just need to.
It's the assumptions, and then it's the master budget quality information.
Budget, master budget in class. That's what you're talking about, the master budget in class problem 1.
Correct.
So raw materials, ink, to include. So that's 20, and then paper, that's 8. Then direct labor, 10 bucks per hour. So I divide that, and that's 2.
That's how you get the rate, but your productivity rate, then that's gonna come on the schedule is 10.
And what it is?
Okay, Joanna,
Joe.
Yeah, I'm here.
go to the labor budget. So you've got the It is produced. And so you have a 10 per situation.
Huh?
You can make 10 per hour.
Right. 10
How many,
books per hour.
how many hours are you going to use?
Would it be 5?
$200.
Oh, this screen doesn't need to be there.
10.
So this is 10 and this is 5 and this is 2.
No, let's go back to the per unit requirement is 10.
Okay.
Okay.
That is, you can make 10 per hour. So if you were trying to determine the total labor hours that's going to be worked, if you can make 10 an hour, you can multiply or divide. Which one you going to do?
10 books per hour. So when I divide,
Divide.
So wait, so you can make 10 per hour and you divide it by the amount that you need. Okay, so that would be 50.
it has 0.5, but oh, that's
250.
250. I'm sorry. I thought that was 2,000. 250?
Correct. You should be doing this on your sheet, Jazz. I heard you disturb your beauty now. Well, it's time to work.
So then what for the labor rate? What do we do? Do we divide 2 by 10?
What is the labor rate?
Hold on, I have to.
Is it 25?
Paper.
It's hard looking at this screen.
You pay them $20 an hour. So how much you want to be paid?
Okay.
Joanna?
How much do I want to be paid?
$50. If you work 250 hours,
Mm-hmm.
at the rate of $20 per hour, how much would you want to be paid per hour?
25.
Let's not be greedy.
I took 250 and divided it by 10.
You're going to work 250 hours.
Mm-hmm.
And you're being paid at what rate?
And
I don't know. How am I supposed to know that?
Then it's $20 an hour.
Are we just making up? We're just getting the $20 from thin air?
It's in the assumptions.
Okay.
So they make 10 books per hour and they are paid $20 an hour. That's in the assumptions.
So they get paid $12.50.
Now, I bet you if you're the one being paid, you want a little more money.
So why is it not 25?
it's $20.
Is what?
Tell them, KP.
I'm confused.
I am too.
The
Why is it 20?
So we
the assumption says the workers can make 10 books per hour.
Right.
And you pay them $20 an hour. So if you had to make 10 books an hour and you're being paid $20 an hour, how much money would you want to be paid? If you sign an agreement for $20,
$5,000.
what?
200?
Well, the labor rate is $20.
Okay. And I make 10 books an hour.
Well, we already done that.
We did that one already.
So we gotta pay them for what they made already.
Right. So they would have worked 250 hours.
Uh-huh.
So the labor rate goes on the next line, which
Right.
is $20.
Oh, so we don't have to calculate that. It was already given to us, you said.
Yeah, I was in the assumptions.
Okay. Well,
Oh.
So your total direct labor that you'd be paying would be, if you work 250 hours at $20 an hour, how much money would you want?
$12.50.
$5,000.
$5,000.
5,000.
$12.50.
I want $5,000
For 250 hours?
because I work 250 hours and the labor rate is 20, so 250 times 20.
I want 5,500.
Is it
$5,000.
5,000?
Don't be greedy. It's 5,000.
Okay.
Do that now, Joanna.
I just gotta get the terminology right, and then I'll be good.
So they produced 2,500 units. They made 10 in an hour, so they would have worked 250 hours.
Okay, got that.
And if you were paying them $20 an hour, if you worked 250 hours and your pay rate was $20 an hour, how much money would you want?
Oh, okay, 5,000
Girl,
on my check.
You were trying to sell yourself short.
You were trying to make it hard at first.
No, I wasn't. What's hard about that? It says units produced per unit requirement. I think y'all have had this language before. Total labor hours, labor rate, total direct labor that's going to be paid. I think you've seen all of that terminology before.
So with my per unit requirement, would that be 10 across the board?
Yes.
Okay.
Don't pay them $20 an hour across the board. So I assume that you can count the rest of this now, Ms. Brady.
Oh yes, I'm doing it now.
Then you got to make a journal entry.
Oh. Oh. Okay, I forgot about that.
Joanna,
Yeah.
I want you to post all the journal entries to the ledger and do a trial balance.
What? What do you mean? We didn't even finish doing the work yet.
I'm just saying, I want you to post all of the journal entries to the ledger, one by one as they're made.
Okay.
Since you owe me
Where's the ledger?
Since you owe me some work.
I do too.
Yeah, sounds good. Oh wait, is this the ledger?
What?
Where's the ledger?
Pull up a ledger. Your kind of ledger.
Okay, here go the journal entries.
Put your sheet on there for ledgers. So pull up your sheet for the ledger. You need a journal.
I can't, when I do that, this thing won't let me share anymore when I pull up another application.
So you can come back and share later.
Okay.
So what I want you to do is to pull up a journal sheet, and a ledger sheet. And
Okay.
you don't necessarily have to be up. You just begin to do that.
So I can make a ledger sheet, my own?
Yeah, I could possibly send you one. If you want it in Excel, remember, you've got the managerial accounting working papers. So you can go there. Got it?
Yeah, almost.
So you can just get a managerial worksheet and pull up the journal entries and the ledger, and then of course the trial balance will fall from that. Because what we've got to be able to do is when we finish and make all these journal entries, we got to have $100,000 loss.
We have to have $100,000 loss.
But isn't that what isn't that what we said in the assumptions?
You know, let me go read the assumption because I forgot what the assumption said.
Let's see.
Oh yeah.
Remember we went and calculated the quantity?
Yes, I do.
How we doing, Tara and Mr. Daz?
What's going on, Professor Boyd? How you doing?
Pretty good. How about you?
Stressed.
Oh,
Not quite punctual,
you
but
gotta
I'm
get
here.
things on time, Daz. That's not gonna work.
With my occupation.
All right then.
Look here now.
You see your president trying to steal a second election?
Yeah, need to get in there and show y'all something. Get everybody,
Huh?
get y'all.
He tried to steal a second election.
Ooh,
See that?
look at it. On my nerves.
I was actually pretty surprised. I actually thought he was going to do a little bit better than what he did, even though it's really close.
He did pretty well.
I actually thought he was going to win. Now it's looking like that's not going to happen.
I don't know, just shh, be careful.
Well, I mean, the numbers are in, so at this point, it's a formality. But he could pull a George W. Bush, and go to court.
You see Trump, he trying to sue Michigan. How you? He's trying to sue Michigan, put a lawsuit on Michigan because of their votes.
Yeah, he's claiming that they weren't given the proper opportunity to send his people in to watch the polls get tabulated.
He is such a crybaby. He is a 5-year-old in a 71-year-old body.
He doesn't want to go to jail. He doesn't want to go to jail. So
He needs to go to jail.
He's going to jail. If he loses this election, if he loses this election,
if he wins, he's not going to jail. But if he doesn't win, he goes to jail.
Right.
Well, you can't arrest a sitting president.
Yes, you can arrest him.
It's unconstitutional. It's unconstitutional. But he
This is the hardest one thus far. I don't like this one.
Me neither. Too much.
Don't like.
You said the last thing we did was that break even, that loss, that target loss, target profit. He was like, this is all you need to know for the rest of the semester.
But that's the starting
He made
point.
it this far.
That's the starting point.
Oh my God.
Professor Boyd, man, why don't
I might need to get me a job.
Not a job. Professor Boyd, why don't you teach intermediate 1 or 2? Oh.
Well, you have other people who want to teach it,
but they don't teach it. They put it online and tell you to go look up resources on freaking Cengage.
Yep. See,
yep.
I got y'all spoiled. Y'all spoiled.
No, I'm learning.
Actually, because you're a professor that teaches.
No, I'm actually learning because I had to do something in QuickBooks. Just learn what that was.
QuickBooks is
for
good.
work.
To catch on to.
I had to do something in QuickBooks for work. So
that's my problem with all my work on it.
Meantime, these dang on dogs. Oh my God.
Let me just see.
You looking for the one we did yesterday?
Yeah, I was looking for it, but I sometime
Yeah, we need to
stole.
start from the bottom and build our way back up.
Started
You
from the
need
bottom.
you need to do what?
I need to start from the bottom.
What you mean start from the bottom?
We'll start from the top.
What's the top?
The
All right, well
beginning.
let's look at this then.
Okay.
We had quarterly sales that are gonna be spread over first, second, third, and fourth quarter. We had a selling price that was given at 100. We had collections 50% the month of sale, 30% the month after sale. Desired ending inventory was 50% of the next month's sales. The raw materials, it took 2 ink cartridges at $10. The paper, it took 2 reams of paper at $4. Made 10 books per hour with $20 an hour. Manufacturing overhead total was 25, depreciation 10. Selling expenses 20% of sales. Administrative expenses 50,000 a quarter, 10 in depreciation. Your initial cash was 100,000. Minimum cash required is 100. You purchased $1 million in equipment with a long-term note. You were paying on that interest of 25,000, principal of 100,000. The first point is coming in here to our formula, which is a target loss of 100,000 and break even. So that's the first thing we're gonna do.
Okay.
Selling price you were given, and it was what?
It was.
Okay.
I gotta pull it back up.
Where are y'all?
I was still on the other paper, the worksheet paper that we have to fill in. The selling price was $100.
$100. So you might want to just copy those assumptions to that.
Okay.
Selling price is 100. What do our costs look like? Run the assumptions. How 2 ink cartridges at $10, what's they gonna be for ink? So everybody just look at the assumptions. We got
$10.
How much?
Raw material ink is $10 unit cost. 2 ink cartridge per book,
So that's gonna be what?
20.
Oh, this is the one we did in class.
Yeah, so that's still working on it. That's $20. The paper's gonna be what?
It's 2 rooms per book, $4 unit cost, and that's gonna be 8.
8. Let me just make this up. Yes. Okay. Then the direct labor, 10 books per hour, $20 an hour, what we're gonna have to have there. Let me just put these over here so we know. So I'm just putting the unit costs over here. Then we'll transfer them over in a few minutes. That's 8. Brady, what you say the labor is going to be on a unit basis, since that's yours?
2.
It's going to be 2. Okay. The selling expenses are 20% of the selling price, so they're variable. So if our selling price was 100, then the selling expense is going to be what?
Wait.
You pay the salesman 20% of sales.
Right.
So the selling price is 100. How much they're getting on each sale?
Oh, $20.
$20. Bad debt, we go up here and we look at collections of 50 and 30. So that means 20% is not being collected. So 20% of the sale. So once again, I'll just put the 20 here for the bad debt. So what you do, you subtract the collections from 100%. That gives you your bad debt percentage.
Okay.
So now let's see if we can move those numbers over to our new chart. Bad debt was 20.
Mm-hmm.
Was 20. Labor was how much?
2.
2.
2. Ink,
20.
paper,
8.
8. So these are all our variable costs. So we're going to add them up.
And it's supposed to equal 100 or?
You have to add them up to see what they equal.
70. 70.
But if they equal that, then you would be making the money because your selling price is 100.
170.
70.
So we add all these up. That's why I had y'all on your Excel sheets. If you add them up, how much is it?
70.
70.
Hold on, let me put it on my sheet.
The margin is what?
Who? I
Contribute
remember
30.
30. Didn't y'all just do this? I thought KP said you had it down.
I had it. I forgot we were supposed to subtract the 100 from 70. I remember now. I'm busy, you know. Got these equations going.
Okay, so this is a key number here. Fold it and make it 16.
Ooh. Oh, I messed
Okay,
up my
let's
paper.
go back up here and get our fixed costs now. Manufacturing overhead always fixed 25, 25, 25, 25. That's 100,000. Okay.
Yep.
Okay.
Administrative expense 50, 50, 50, 50. That's 200,000. And interest expense is fixed too. 25, 25, 25, 25. That's 100,000. So we just annualize those amounts. So we're gonna bring over for fixed costs 100, 200, and 100. So fixed
What about the
cost,
principal?
yes. So the total fixed cost is 400,000.
Okay.
Next, we're solving for the quantity. The key thing here.
I need to complain about these damn dogs.
So if you got this information and you're trying to get a target loss of 100,000, then what's the quantity going to be?
Let's see.
You know how to do it, KP.
All right. So it's gonna be 200,000 minus 300,000 divided by, what was it, 70?
30.
Oh, 30? Okay.
Daryl, what's the quantity?
10,000.
Sir,
What's the quantity?
wasn't it
That-
given?
What's the quantity?
Hold on, I'm about to give it to you.
10,000.
10,000, right?
I get 10,000.
Because you had to add the 400,000.
So it's
minus the 100,000, which gave us 300,000.
number 000
Right.
minus 100,000.
And that gives you 300,000, right?
0, put a parenthesis.
Mhm.
Then we're going to divide that by what?
We're gonna divide that by 30.
30. You see that, Tara?
And 30 is our
That's the target loss formula. Fixed cost minus 100,000 divided by the contribution margin. Oh, Tara.
That part was easy. I remember that from yesterday. I still have
So how much did we get?
Wasn't it $20?
Oh, great.
You said how much we was in debt, right? I mean, collections, right?
What's the quantity?
10,000.
10,000.
Okay. Desmond.
Huh?
Yes.
Oh, Desmond.
Calculate the break-even quantity for me, given this situation. All you need is the information is gonna stay the same. So that's gonna be there, and the total fixed cost is gonna be 400,000. That's gonna stay the same. So what's my break-even quantity? So this is the break-even column here. We had a target loss column. Now we got a break-even column. So what's my break-even quantity gonna be?
Definitely higher, but I don't know exactly. Give me a moment.
the quantity should be less, right? I forgot what we do it. Hold on, let me find it.
Oh,
400,000 divided by 30.
All we're gonna do is take 400,000 divided by 30.
13,333.
The infinite number of threes on the back
I
end.
told you all to memorize these formulas.
I'm surprised I wasn't going to remember it, but I can now.
I only gave you 3 things to memorize the whole semester.
That's not true.
To memorize, I only told y'all, you can look up other things. I told y'all to memorize 3 things. Whole semester. Okay. So I just want, so Daz, do you see that now, how we get that?
I see it now. I hope I see it tomorrow.
Oh, come on.
I like that.
Let's have some confidence. So we aren't going to do the break-even one right now. But what we always want to do is to test it to make sure that it's going to work out. Okay?
Where is this on the worksheet you gave us? I cannot find this.
Oh,
This section.
don't you have various sheets on that worksheet?
Oh, I got it.
We don't got no bad debt on the other worksheet.
It's right here on JE. It got bad debt expense on JE worksheet.
Journal entries in a little bit. So if what y'all did, I want y'all to come up with $100,000 loss here. That would produce $100,000 loss. So prove it to me. So what we're gonna do, we're gonna look at a shortcut way to do this. We're gonna take the contribution margin at 30, okay?
Okay.
So since the contribution margin is 30, we're gonna simply multiply 30 times 10,000. Can y'all do that?
Yeah.
What's 30 times 10,000?
300,000.
So why was I able to do that?
Because the contribution margin was already given. And
Yeah.
then we already know
I
it
could
was,
have multiplied by 100 here, and then I
yeah.
subtracted what? 70 here, or minus 70 here. And all I'm saying is that you can just go ahead and subtract 70 from 100, get 30, multiply 30 times your quantity, and you get 300,000. What were the total fixed costs?
400,000.
So do we have so that's a shortcut for you, Terrell.
Professor Boyd, sir, I can't remember the regular cut, nonetheless the shortcut.
We'll do it the long way for you. What's up 10,000 times 100?
100,000.
Might be more than that, isn't it?
$1 million?
Oh, you said 100. 100. It's $1 million. Yeah.
Selling
Professor
price, the
Boyd,
selling
go
price
ahead.
was 100. We multiplying that time to 10,000, we get the million. The
Right.
variable costs were what? 70. So we multiply that by the 10,000 and we get what? 700,000. I forgot Terrell is a traditionalist. He like to probably vote a Republican. He don't like to do things simply. So $1 million minus 700 gives you 300,000. So I've given you a shortcut for those who want the shortcut. Just multiply the contribution margin times the quantity. But if you want to do everything, that's fine.
Wait. Hold on. Wait, that's the shortcut. I thought that was the original way you showed us how to do it. You were like, once you get your quantity, just multiply it across to everything.
But I'm just saying, you can come down here, multiply, and be done. You don't have to do these.
Yeah, no, I mean, okay, I get what you're saying. Never mind. I think I'm confusing two different things that we were talking about in these last couple of classes.
So I'm just saying, you got to be able to work smarter, get ready for the final, since you got to do this all by yourself.
So for the final, it's comprehensive?
Just what we're doing now. So
Okay,
I guess
this is our last test?
What?
This is our last test?
Yeah, the final will be your last test.
And this is the
When
final?
is the final?
This is the final.
Okay.
He gonna try to spice it up.
Please don't.
Seriously, that's exactly what he's gonna do. Spice it up.
Please don't.
I don't have to. Final is 5 to 7 on Thursday.
This Thursday or next Thursday?
Next Thursday.
Oh, okay.
Well,
What?
Thursday.
You talking about November 19th?
You'll be given like this, okay? So you'll be given this.
Something like that?
Yep.
We talk about it, right?
We got class on Thursday the 19th, right?
No, that's not. We don't got no class that day.
I think school out.
That's finals. That's finals. That's the type finals. That whole week is the final week.
Prior to that.
So
Huh?
look. So for the final, once again, you'll be given an assumption sheet like this.
Did y'all go over this already, Professor? That part up there?
What part, Shekinah? Wait,
Um,
Shekinah.
can you scroll back up?
What part?
This right here.
Which part? The assumption?
Yeah, this right here.
Mm-hmm.
We talked about
Okay.
what? You
Oh,
got a
cause I
question?
had missed the first section of the office hours, and I know how to do it, but I'll have to just go back and look at the YouTube video.
Okay, well, you can catch up to what we hadn't done much.
Yeah, he
All,
didn't say
Okay.
anything. He was just explaining it.
all we've done is to say the selling price was $100.
Mhm.
We put that here. And we put in those costs. You know how to do those costs if you don't erase the right answer.
Yeah, I know how to do that.
We got 70, then we got a contribution margin of 30. The fixed costs were 400,000, and then we calculated the target loss quantity of 10,000. So you can do that, right?
Mhm.
Then sales were, then we just proved it. And I gave them a shortcut. They could just multiply 30 to CM
But
times quantity,
okay.
subtract the fixed cost, and get the net income. Now, the significance of this net income that once we make all of those journal entries, our balance, we got to have do an income statement. We got to have $100,000 loss.
Mhm.
So once we go, so remember, we're making a journal entry everywhere. Now, what about the sales budget and cash receipt? Are there any questions given that? Oh, I give you Friday since somebody was pestering me. But on next Tuesday, each team is going to have a quiz. And on the quiz, they will be responsible based on their project, making this calculation, sales budget for their project. So everybody's doing that for their project. And on the following Thursday, they'll get the project, and you complete the rest of this process. So your year one done. Now, if you're satisfied with a C, you can just do year one.
What does CB mean?
If you want a B,
So how heavy is
even.
how
And if
heavy?
you do an A, you got to do target loss, break even at $1 million. I don't want to strain everybody.
How heavy will this be on our final grade?
Say what?
How heavy will this be on our final grade?
What is your final grade?
I said, how heavy will this last test weigh towards our final grade?
I don't know however many points I got left. I've been giving y'all a lot of points. I'm trying to get as much as possible. So you'll have a break. This quiz will be worth 20 points on next Tuesday.
And now we don't need this right here.
It'll be worth 20 points.
What does CB mean?
Yeah.
Next to where you have the journal entry, JECB.
That's CB, that's cash budget. So what that means is that amount goes in the journal, it goes in a journal entry and the cash budget.
Okay.
So Joanna, what you are doing is making, yes, we make the journal entries today and tomorrow. You're making those journal entries, putting them in the ledger, doing a trial balance, doing an income statement. And that income statement, what we're doing has come right back to this $100,000 loss. That is what
Okay.
we put all these things in. Now everybody should be, need to be doing that, but you're gonna be showing them how. That'll help you when Tuesday comes up with your team.
So we're gonna learn it on Thursday?
What you mean we're gonna learn it on Thursday?
Because you told me that I'm gonna do it today, but I have to learn it first.
So we give you the journal entry and you just posting them.
Okay. Are we doing it for each year, or are we only doing the first year?
During the first year. So
Okay.
everything you're doing now is just the first year. You simply brought in the information needed in the production budget. Now, do we need to go with the sales budget again?
Yes.
Yes.
Okay. The first thing we do on the sales budget is this $10,000 that we calculated. We put that $10,000 here. So that's the first thing we do. Then what's the next thing we're gonna do?
Take 10,000 of 40%.
So so for each one of them, like 10% will be 1,000, then 20% will be 2,000, so on and so forth.
So now, yeah, that's right. We're breaking it down by what quantity is going to be sold each quarter. That's right, Terrell. Goodness, good to have you back in the house.
So,
1,000.
so first we have to figure out the quantity we need to get a target loss of 100,000, and then we start off with that quantity for the sales budget and cash receipts.
Right. And that's going to then, remember on the production budget, Joanna, this becomes the first line of production. So you got to work smart, okay? You got an Excel template. You got to work smart and use that template. Selling price was what?
$100.
$100.
So we got the selling price in. So what's our total sales going to be in the first quarter? And you see, you should put a formula in here. So once you should have a formula that once you put the 10,000 in, this is calculated. Then you put your selling prices in, and then you should have a formula calculating. Got it? So how much is this?
1 million.
1 million.
That's 100,000.
That's 100,000.
Oh shit.
That's up.
200,000.
200,000, 300,000, 400,000.
And then $1 million.
Now, notice that this million, that the total dollar sales were. So you go back and check to make sure that you don't put 10 million here rather than 1 million, or you'll be in a world of trouble. We said all of these were credit sales.
How do we know if they're credit sales or not? Is it just always going to be credit sales?
That makes it easier.
Okay.
Hey, Professor, question.
One more time.
Hey, when companies get external auditors come in, is this what they're looking at? They're looking at the quarterly versus the overall?
Well, the internal audit is after the fact. And there may be some planning coming in, but here we are forecasting what's going to happen in the future.
Okay.
But an audit, what we were doing at the start of the semester, where okay, this, these are the financial statements, and same thing with principles one. They're auditing after the fact. This is managerial accounting planning for the future.
This is the step that leads to the journal entry of investing into the company, correct? That
right. Okay, bad debts we said was 20%. Collect in the month of sale.
50%.
And we collected the first month after sale, how much? 30%. So, what do we have here? You should have a formula in here, but this would be what?
20,000.
20,000.
40,000. 60,000 and 80,000.
And that total is going to be what? 200,000. So when you see a journal entry got to be made. And
For bad debts, right?
Yeah. And eventually we get into a journal entry has to be made and the amount goes to the cash budget. Okay, so our collections, we don't have any first month after collections this year. Next year we would. So this is zero. But we collect 50% of the sales. So how much did we collect?
50,000.
50,000.
100,000.
50,000. So how much we collect the next one?
100,000.
But we also collect what? 30%. You made 100, 20 is going bad. You're gonna collect the other 30% of this. So what's 30% of that? 15,000.
Wait, how did we collect 30% of that?
You got to collect 30% of this number. Let's just look at what's happening. So let's stop right here. Our credit sales, let's just stop here. Our credit sales in quarter one were 100,000. See that? 20% of the sales went bad. We collected 50% in quarter one. The next quarter, we get the other 30. 30 plus 50 plus 20 equals 100.
Also, for quarter three, we'll take 30% of 200,000 for the collection of first month, quarter three.
Correct. So we always slide the 30% over. So 30% of 100 goes here. Then 30% of 200 goes here, which is what? 60,000?
Yeah.
Wait, that's the part that I don't understand.
Hold on, wait a minute. I'm got 50,000.
What?
I don't understand how you got that. Where it say collections month of the
There was
sale.
50% of 100,000.
Okay, I got you.
Assumption that when we made a sale, we got 50% of the money in that quarter.
Oh.
30%.
And the quarter was 100,000.
Well, these should be quarter. I won't change them right now, but that's not bothering anybody, is it? Good. So
I don't understand why that one is zero.
because you don't have a preceding quarter. First month
Okay.
out.
So when you say 30% of the first month after sale,
But you didn't have any sales because you just started.
okay, so this is a report for the current year or the previous year?
Current year. Kind of a see when you do the second year. We don't have any sale. We'd have to have a number over here
Mm-hmm.
for us to be able to come and put a 30% here. There'd have to be a number over here. That's not. This is our first quarter. So the only thing we're gonna get in the first quarter is 50% of 100,000. In the second quarter, we're gonna get 50% of 200,000 plus 30% of 100. We getting the rest of that money.
I'm trying to let it sink in.
What's 50% of 300,000?
150,000.
Then we're gonna go back over here and get the rest of our 200, which is 60,000. So 60 plus 100 plus 40 equals 200. Let's go on to the fourth quarter.
200,000. And then 90,000 under it.
I get 90,000.
30,000 of 30%.
Yes, 90,000. Okay, but
And
note
also,
here.
I'll just be going a little pattern.
Okay, so note here, Joanna, the sales were 400,000 in the fourth quarter. We collected 200,000. When we get to the next year, we're gonna get 30% of the 4120. That will be collected in the first quarter of year 2.
And that will go, okay, I see. That will go where that 0 is right now.
Yeah, and that on the chart for year 2.
Okay.
So,
oh, I see.
always behind. It's just like you working for somebody and you got a month in the hole. You know, you don't get paid the first 2 weeks. But the day you start work, you get paid 2 weeks later. Whatever.
Okay.
Okay. So our total collections, 100, then 130,
No, 150.
150. I'll take your word for it. Next quarter,
200.
next quarter,
250.
so what are our total collections?
700,000. Wait, let me see.
650,000.
Right.
650. 600,050. Is that what you had said?
See, this 130 is what? Make that mistake. That's 130. I don't think those 150s from. Then we collected
Oh,
one.
you subtract. Oh, yeah.
So that's
Sorry.
210.
100. No, 110. 150 from 6.
Plus
Oh.
and 200
Oh,
plus is
290. And you get the total from that?
Yep.
680.
680,000.
All right, I assume y'all got that right. Now let's look at what we're gonna do journal entry wise. First of all, we take these collections, copy them, copy. Then we're gonna paste them on the cash budget. And this is 680, correct?
Mhm.
Yeah.
We
Then
gotta do all this.
Yes. 100-point project, you know. And you had a beginning
Project.
100,000. Okay. So for the first quarter, we don't know because we don't know what the beginning balance is going to be. But for the first quarter, you had 100,000 available. Now, let's make the journal entries. So I'm going to go up here, see if I can get to this. Now, you got an example of all this, okay? Got a worked out problem. Okay, so these are your first set of journal entries, Joanna. Okay, so the first journal entry, we think we start off with $100,000 in common stock. Okay, so we debit common stock for 100,000, debit cash for 100,000, credit common stock for 100,000. Then our credit sales, so we come up here, we're $1 million. So we simply debit account receivable for $1 million, and we credit sales for $1 million. Then the bad debt expense in total was what? 200,000. So we're gonna debit bad debt expense 200,000.
You supposed to have cash right there for 2.
No, they're all credit sales.
Yeah, we just didn't use cash.
That
Oh,
makes
okay.
that makes it more difficult in terms of calculation because there's no bad debts on the cash. Then we collected how much? We collected 680.
Are you gonna give us the rationale?
For what?
Like, are you gonna tell us like which journal entry like needs to go up on the side? You have like which everyone means, or is there a specific order that they all go in?
Cash investment, record total sales, record bad debt, record collections of receivables, record cost of goods sold.
Is it always gonna be in the same order like that?
Yeah, you can keep it that order. No need to change it. Only change be based on how much you got in raw materials.
Okay.
These are basically the standard ones that would be used on your project. It doesn't change. I'm going to make journal here, Joanna. We bought some equipment. $1,000 in equipment, so we got to record that. So we're going to debit equipment
Hey, Professor, I have to log off.
Okay. So credit notes payable for that million. So once again, you're recording the initial investment, the total sales, they're all credit sales, the bad debt, vehicles, purchase of equipment, purchase of equipment. And then you know that when you make a sale from your inventory work, there's always what?
For the cost of goods sold,
What?
you have to make a cost of goods sold entry.
Correct. So let's make our cost of goods sold entry.
Hey, Shakana, could you mute your mic for a little bit? I can't really hear because the wind.
I'm sorry.
It's okay.
This is fine. So I'll just get the numbering out. So we're gonna debit cards.
Oh, not
And we're going to credit finished goods inventory. Note that I tell you that is the amount that you're going to calculate is the sales quantity times total unit, direct materials, and direct labor costs. So I go up here and I see that my ink is 20, paper is 8, labor is 2. So that's $30, okay? Ink, paper, and labor. Those are the only costs in the overhead. I mean, in the inventory. So I'm going to multiply by those variable costs. Yeah, 30. And how many did we sell?
10,000,
10,000. So what's 10,000 times 30?
300,000.
Okay,
So we add the raw materials and direct labor and multiply it by 10,000.
correct. We did. Those, this is the first set of journal entries and the most journal entries we typically got, okay?
Okay.
Now, when we go back in here, gotta be at 4:30. This explanation shows you the journal entry. So we've done all of these.
Mm-hmm.
There are no journal entries for the production budget. There's raw materials. For each one, you got to purchase the raw materials. Then you got to make your payment. Okay, that's 2 journal entries for each raw materials. There are 2 of them, so that's 4 journal entries that has to be made with regard to raw materials. Direct labor, you're just gonna debit whatever your dollar amount is in total and credit cash. Y'all got that, team? Whatever.
One more time, because this was mine. I'm sorry. So we just have to debit the cash and credit the finished good inventory?
Gonna debit finished goods and credit cash. We aren't gonna have any work in process inventory. We're gonna put it all in finished goods. And the same thing
So
is
this gonna
happening.
be our direct labor numbers.
Right. The
Okay.
total for the year, you debit
The
finished
total
goods.
for the direct labor.
Yeah, the total. Remember, you got
And
that
also,
in each chart. So
what's the other one that you gave us?
what other one did I get?
What's that? The other one he gave us, Jasmine?
Which one?
Capital expenditure.
I can't remember. That's the
So
other
you want a different journal entry for every single section, like a different set of journal entries?
Right. So here the journal entries are always on this last line. So whatever. So when y'all did direct labor, there's a total tab. That's in the journal.
CB and GE, JE.
CB is the cash budget. These numbers go to the cash budget. JE is journal entry. So it's telling you got to do both things. You got to do two things at once. Get the schedule done, and we'll finish. And we'll put this in tomorrow.
So the cash budget. Can you go to that right fast?
Cash budget is where we determine whether we need to borrow money or not.
Oh.
So we got the receipts in. Now we're going to put in all the disbursements, total payments. Do we need to borrow or not? And of course, we have a minimum cash balance. So we'll work on that. We can get that in, but I think you all have the capital expenditure budget too.
Who, group 5?
Yeah. Y'all only
I
have,
don't think we had 3. We only had 2.
one too.
yeah, you got the capital expenditure budget also.
I don't get even how you do that.
I don't remember.
This is
So
a
Oh, you gonna
lot.
go over that part?
bought equipment with a long-term note. We've already made the journal entry for that. Then all you gonna do, this is the part for you all. All y'all got to do is come here. Copy this.
So all we gotta do is copy and paste that and put that on ours. Do you got that on ours?
I don't remember. I don't remember this.
And you're done.
Okay.
Totals over here. Don't worry about this time. Put your totals over here. They go on the cash budget and the journal entry. So quit making it like y'all got a lot to do.
Okay, so we're gonna add all those up for the total payment.
You gotta work smart and use Excel.
Mm. Can you post this? You posting this this office hour?
I will post it later tonight once it's recorded.
Okay, thank you.
So tomorrow we'll probably run over to get this finished. So schedule your time accordingly. So we may need 6:30 or 7 tomorrow. So everybody schedule their time accordingly tomorrow.
Why, we got a quiz?
We want to finish this problem.
This ain't even a quiz. Like you don't have to section this if this a quiz. Like 1 section, 2 sections.
But if he do that means you gotta wait for somebody else's part to finish the next part.
That's right. But you saw how quickly I did this right. It's not going to take that long. You all thought this was a lot. All I had to do was put these things down, and you're done. The other administrative expenses are something to pull down. 3-minute, 5-minute process. Selling expenses, a pull down. Manufacturing overhead is kind of a pull down. Labor and raw materials are the only one that take a little more time. Then they're done. So you'll see that this is something that you can do in an hour by yourself for the final exam. You all have a pleasant afternoon.
Thank
Make sure you post this tonight, please.
What? It'll be posted
Make sure you-
tonight. I
Okay.
wouldn't leave now except I got another meeting bait outside. But we'll pick it up and we'll finish this tomorrow. Have faith, okay?
All right.
Okay.
All right.
All right.
Bye.
Bye.
Bye.